Anthony Pompliano, welcome to the show, man.
Absolutely. Thanks so much for having me.
Dude, I am really excited. So there's something, my audience has heard me talk about this before. I feel a moral obligation to get people to look at cryptocurrency, Bitcoin specifically. And there's a famous saying, I'm almost certain you've heard it before, which is poor people spend, the middle class save, and then the wealthy invest. And this is what's going on in cryptocurrency. To me, seems like the first time where the average person, whether you're poor, whether you're middle class, doesn't matter. You can actually front run the investor and use, whether it's Bitcoin or something else, as that investment vehicle. Talk to me about the breakdown here in the US of people that invest versus don't invest.
Yeah, so one of the easiest ways I find to talk about Bitcoin is just talking about the legacy problems and kind of what the average person does, and both from those that are successful and those also that are not successful. And so let's start with some statistics around just the United States, right? 45% of Americans hold no investable assets.
That's so crazy.
So right
what is an investable asset for people that don't know what that means?
A stock, a bond, cryptocurrency, real estate, right? All the things that are not cash that you're buying because you think that they're going to appreciate in the future. And so really that 45% of folks are living paycheck to paycheck. They keep all of their wealth stored in dollars in a bank account. They tend to be, obviously not very well financially off, but also on top of that, they tend to actually not be nearly as educated about how the system works. So there's a wealth inequality gap, but there's also a very large education gap. And so,
do you think they're one and the same?
I think that the education gap actually drives most of the wealth inequality. And really it's because of the debasement of the currency.
That's interesting. So we'll get to debasement of currency in a second. I've made a statement that I expected to be more controversial than maybe it's become, which is, so I worked in the inner cities a lot. Yep. So I have seen firsthand up close intelligence be evenly distributed. So they can process raw data very quickly. Like, yes, you're hanging out with them. You're like, okay, you're poor. You come from a long line of poverty, and yet you're incredibly bright. Like, I am confused now as to why you haven't, been able to achieve escape velocity and get out of here. And then you realize that their frame of reference, the way that they think about things, is so detrimental because your behaviors ultimately are all that matter, right? You can think that Bitcoin is the greatest thing since sliced bread, but if you don't actually buy any Bitcoin, then you can't take advantage of the growth. And so I began to realize that, or hypothesize, I should say, that generational poverty is a frame of reference problem far more than it's a money problem. And that if you took that same person, so they're born on day one, they were born to parents that have, lived in the inner cities forever, they've struggled for generation after generation, and you bring them into a household where they're going to be educated around investing and, what the game is that you're talking about, that it's a system, it works in some kind of way. That way is predictable, and it will reward some behaviors and it will punish other behaviors, and nothing else matters. And if you do that, they will come out just fine. And so I was like, wow, this really is a knowledge gap problem.
Yeah. I mean, think about if I told you to go play a game and I said, but I'm not going to tell you the rules, right? Be pretty hard to play the game at first, at least. Maybe you figure it out, maybe you don't, but you're obviously going to be much better equipped to play the game if I explain to you how the game works and what the rules are. And so if you think of money or finances as a game, there's really one key rule that everyone has to understand, which is the dollars will be worth less in purchasing power terms over a long period of time. That's not a negative towards the dollar. That's not a positive towards the dollar. It's just that is a fact.
And we call it inflation.
Yeah, and the system is built that way. And the economic argument for why it is built that way is because if I know that my dollars are going to lose purchasing power, meaning that today it costs me $2 to buy a loaf of bread, in 5 years it'll cost me $4 to buy a loaf of bread, I'm financially incentivized to either invest the money or to spend the money. But holding it is a losing proposition. Now, that economic theory is predicated on the fact that everyone knows the dollars are going to lose value, because what ends up happening is those 45% of Americans end up not investing the money or really spending the money. They're trying to save the money, but it is losing value. And I always go back, and I think this generational idea is really can be extrapolated even further. It's not just folks on the inner city. If you think back, I'm 33, you're in your 40s. If we go to our parents or our grandparents, for the most part, their financial advice was save, right? Spend less than you make. If you save, then you can make your way to financial security. That was actually true, specifically around our grandparents' generation, a little bit for our parents, and then for us, not so much. And so the advice that was passed down was actually predicated on a situation that no longer exists. Because before 1971, there was nowhere near the debasement of the currency that there is today.
Because it was tied to gold?
That's a huge piece of it for sure, right? Which is basically the fact that when we handed over the power to print currencies, right? This is a 50-year experiment that we're in. And, again, there are some very positive impacts of being able to print currency, right? You essentially are able to devalue the currency. You can pay off future debt with kind of less valuable dollars. And there's all this economic theory that...
Really fast, I want to ground this in something I've heard you say before, which I think it was so simple. I was like, whoa. You said, if I have $100 in my bank account, and I need 150, I can't go in and edit the database and now I suddenly have $150. But the government can.
Yes.
And I was like, whoa, like when you say it like that, and it's like literally just somebody going into a spreadsheet, I was like, oh my God. And I even, dude, this is recent. So I'm very good at making money, and I have historically been very bad at investing money. Although now I've become obsessed with investing now that I'm sort of because I was just trying to get as close to my money buried in the backyard as humanly possible. And anybody thinking to rob me, I don't actually do that. So you will find $0 here at my house. But that was my mental sophistication around finance. I didn't understand it. I didn't want to understand it, quite frankly. I'd put a lot of energy into just getting good at entrepreneurship so that I could generate whatever wealth that I wanted. But I came very late to understanding this idea that that the governments can print more, and that in printing more, you make it less scarce. And in making it less scarce, you devalue it. And I actually, as of maybe 8 months ago, thought that when they say print more money, that they were actually printing more money. And so I'm like, when they've got the bag of cash, who are they giving it to? I couldn't understand. But like, if anybody puts any amount of credibility into whether they think I'm intelligent or not, to think that a guy that could build $1 billion company as of 8 months ago was imagining somebody from the government walking around with like a bag full of cash. Like, that's how ignorant I was to the system. And that's exactly how people end up getting held back.
I think that what's fascinating about this is not an uncommon story, right? There are plenty of people on Wall Street, et cetera, who don't understand economics, macro or micro, and also just simple personal finance things, right? This stuff is hard. And it goes back to there's nobody teaching it in school. And so you basically have two ways to learn. You can learn by doing kind of trial by fire, and some people figure it out, some people don't. Or you're lucky enough to have a parent, a friend, a mentor, somebody else who sits you down and explains it to you. And I think that's why we are seeing such an explosion of interest. Yeah, sure, the meme stocks, cryptocurrencies, it's easy to mock and make fun of these young people, but these young people are interested in understanding, how does the market work? How does finances work? How does investing work? And so, if you go back to that data, right, we talked about 45% of people have no investable assets. The two stats that just blew me away when I started to look at this was 80% of millionaires in the United States inherited $0. So the narrative is
interesting.
Everyone inherits wealth and it's just passed down. Well, 80% of Americans inherited nothing. 20% inherited something, 80% nothing. The second one is that 33% of millionaires in America never made more than $100,000 in a single year. So you start to ask yourself, well, how does it that somebody that doesn't make six figures a year become a millionaire? Well, they have to be disciplined and understand personal finance. And so it is possible to do it. It's not everyone. It's hard, right? It's not the easiest thing to do, but it can be done. And so as you start to understand, like, okay, the education is a huge piece of this. You actually see that the people who are wealthy, some of them could explain to you why they're doing things. They have a kind of a deep level and detailed knowledge of the actions they're taking and the reason for it. There's a whole other group of people who are wealthy who couldn't explain any of it to you, and they just know that their parents told them, hey, buy real estate. Real estate always goes up. But they don't understand printing of money. They don't understand quantitative easing, interest rate. None of that stuff matters. They just did the action. And so there's a lot of paths to get to kind of the desired area, if you will. But I do think that Bitcoin specifically, what it's done for me and for other people is I have an economics degree, which is crazy because I didn't learn anything, right? It was only once I started to actually invest money that I started to really get the education. So I always say, Bitcoin taught me economics. It taught me personal finance. It's taught me social psychology, all these different things. But But there's an element of just understanding, hey, invest. Because at this point, given the inflation and the monetary debasement, it is impossible, literally impossible in America to get a financial security position by saving. It's just they're debasing the currency. 38% of all dollars in circulation were printed in the last 18 months.
That's insane. That's insane. Like when you think that we're over 200 years old as a country, that's really bananas.
38% in the last 18 months.
Whoa. So now as I think about, so I'm trying, it's funny, if people go back and watch all my interviews, they see me from the time that this all kicked off with COVID, they see me grasping at straws, trying to help the sort of average person find a way through this, because I really started to, panic isn't the right word, but it's like I was deeply at unease because I knew who was going to get pounded the hardest by what was happening. And it was like, look, I was going to be fine, but a lot of people that I know, care about, love, were not going to make it through this thing. And so I started bringing on, because of the reach of my show, I was getting on like the biggest macro investors in the world. But because I didn't understand finance, I didn't know that that was the wrong person to go and talk to, because they can influence countries and they can help huge hedge funds, but they don't know how to talk to the average everyday investor. And one of my employees kept haranguing me to look at cryptocurrency and Bitcoin. And I was like, David, I just don't have any interest in investing. It's not my thing. Like, I know how to make money. And then NFTs came along and I realized that was going to be the future of my business. So I went all in, and like you started learning all this stuff from investing in crypto, I had to learn about the blockchain to understand NFTs, to create content there that was interesting and compelling. And as I learned about that, I was able to get to first principles, because now I understood how the blockchain worked, which led me to what's different about fiat currency to cryptocurrency. And then all of a sudden you're like, wait a minute, are you fucking kidding? This is what's going on? Like, they can just print money at will. That's insane. That also, when you start thinking about, so one thing that's always enraged me, and this sends me back to my days when I was young and broke, and I would have, let's say, $19 in my bank account, not joking, and they won't let you take it out because there's a minimum that you have to have in your account, or there's like $20 minimum at the ATM. And so I'm like, hold on, I'm not going to be able to go like get a meal right now because of banking rules. So I've developed this just like internal rage over banks acting like my money is their money. And so now, like, seeing how it's hard to get your wallet set up, admittedly, but once you like get on the rails of cryptocurrency, of how easy it is. And so that's really been eye-opening and game-changing. Now I think we have to get to, all right, you have to get to those first principles to form a thesis, and then you can invest based on a thesis.